Hey everyone. So I said I was going to make a macro Bitcoin video, probably add some micro analysis in here as well, but this is just going to be for Bitcoin. Took some time off of my hibernation to come back into this. But I'm going to start off by showing this chart that I showed in my last video. And in the last video, we were, somewhere up here. I had drawn this weekly little order block and said that this area was going to get tagged, and lo and behold, we are tagging it. So this is a very important level that we must hold. 86 down to 78k. If this area is lost, then it's just going to be a slow grind down. Like I've said, I've been openly bearish since September. I said the top was in September. Yes, we had a little bit of a rally, but it doesn't change the overall picture. Understanding market structure is going to get you really far in this market, and that's what people are failing to understand. Market structure has been broken. It was broken over here. Now, this area, like I said, must hold. All right, so if you are looking to open up swing longs, this would be the area. Now, the only problem with that is there is absolutely no buying pressure. None. It's just a coordinated TWAP of sells, and every single push that we get up is just more selling. So when is that going to stop? No idea. And like this is your best case scenario to pump for another lower high. Now, I'm not talking about all-time highs. If whoever says we're going to all-time highs this year or in the next coming month or whatever is absolutely delusional, go ahead and unfollow them. There is an influencer who thinks that only money is made in bull markets. That's why he sold his Lambo. And going into this next year, this is what I'm expecting for Bitcoin. Now, going back to one of these charts that I posted back in January, you can go watch my videos. You can watch. You can go in on my Twitter. If I was in one of your servers, which I'm no longer in any server, you probably saw this fractal posted. This was taken from here. This is the exact fractal that I was taking, and I placed it right here. And as you guys can see, it's playing out to a T. Yes, it's a little off in terms of price movements, but got the move down. There's the leg up. There is the head and shoulders back down. There is the head and shoulders back down. This is more of a diagonal head and shoulders. But if we're looking at fractals, then we are looking at a target of around 71 to about 70k. Okay? Well, 71 to about 65k. Now, this is a fractal. In my last video, I showed you guys that if we take a look at the fibs taken from the March or the COVID lows to the highs, right? The golden pocket comes here, and the 786 fib is there. Okay. Now let's do that same exact fractal from the bear market lows of 22 to the highs. The golden pocket comes around 57 to 57 to 52, and your 786 fib is around 40k. I am not going to go back and attempt this on the previous cycle, on the previous bull cycle, but I'm sure it's going to be the same exact thing. So I wouldn't be surprised if price goes down to this level here. This is a weekly demand zone that has been untouched. We broke out and we have not touched it. So if this area fails to hold, and let's say we actually do hold first, and we go and put up another lower high, right? Then it could look something similar to this, where you have the leg up, which is this, the move back down, which is there, the move back up to the head, come back down to make a lower low, break the structure. That would mean a break below this level here, okay, 78K. Like that. Go back up, come back down, and bounce from the golden pocket briefly, and eventually make our way down to the 786 fib. Now, I think that the remainder of this year, along with at least half of next year, is going to be a slow bleed down with, bounces for lower high shorts. But you don't want to short support. No matter what the chart is telling you, you never want to short support. You want to short resistance. Now, this is a weekly chart. You can break down the analysis and go to a lower time frame and still break and look for intraday shorts. Okay? But on a weekly chart, I'm looking at this yellow area to be tagged, which basically it was. And any bids into this furthermore is where buyers should step in, and then we make that push next to the lower high. Now, if we're going to break this down to a lower level here, so let's go to the 3-day chart, or sorry, the daily chart. You have a clear supply zone here. You have an SR. Okay, so this is going to be the first inflection point. Any moves into here would be another lower high. And then, this is a daily chart, so it's going to take some time. But this would be the first major area to short. Okay. Second one would be around here. So basically, this supply zone that I have drawn is your major level to short. Previously, resistance here, right? We flipped it to support, ran, came back down to support on that 10-10 crash. Look, it held, ran again it held, ran, and then eventually the more touches a support has, the weaker it's going to be. Okay? Think of it as, you're a guy or a girl. The more someone's body count is higher, the least attractive you're going to be to them, right? So that's exactly what happened here. So what we need to look at on the daily, and this video is edited because someone just banged on my door. Not sure it was. Anyways, that is where I'd be looking to look for shorts. There are higher levels up. I've discussed it in my previous video, but this is the intraday area where I'll be looking to short, where we just bounced from, gave a nice reaction of about 1.4K, right? We can go on a lower time frame and talk, but this is just a slow grind down. It doesn't really make sense. We had a range from Monday up until recently when it broke down. If we are looking for longs on lower time frame, then you need certain levels to be retested and flipped. So for example, if I'm looking to long, outside of where we just bounced from, you're going to be longing a 1.5, almost a 1.4K bounce. You want to wait until this level is reclaimed here, and then you can long with stop somewhere below there. Now, for those that are saying, and I've read some of these, analysts are changing their TPs and making it lower and lower and lower. Well, yeah, no shit, Sherlock. The fuck? The market is literally downtrending. Why are you going to have targets of 125K when we can't even fucking hold 88K? All right, so be realistic, remove emotions, and look at the charts. Because if you aren't realistic and you follow emotions or people telling you to buy, then you wouldn't be paying, $200 to get absolutely shit on every single month by, YouTube influencers. So right now, I don't think the market is going to be making huge waves up. Like, this was the previous range. Here's the highs, here's the mid range, here's the range lows. You want to wait until the reclaim of this happens, and then you can long with stop somewhere below here and target the highs up there. But what I think the market's going to do over the course of the next few weeks, especially going into, the holiday season with Thanksgiving coming up next weekend and Christmas coming up next month, I think in order for a low time frame bottom to form, unless this bounce was it, which I still don't think so, you need some consolidation to happen. Allow the short sellers to close their positions and TWAP out. Shorts cover, right? Market, or for those that don't sell their positions and shorting late, they're going to have to cover by closing their positions, and some accumulation forms here, some bottom forms, and then we have to slowly grind back up. The faster we go up, the faster we will come back down. You need to slowly accumulate on the way up. Now, what's concerning is when you have a sell-off like this that's slow, right? Usually, and it's happening now, you can see that these two Bitcoin um, figures here, they're perpetuals, whereas this one up here is Coinbase spot. So right now, the market is heavily leveraged. We have a $70 premium on perps compared to spot. So spot buying isn't organic. People are leveraging this and trying to make some money, which is understandable. But when you have a premium on perps, that is usually an indication, a lagging indicator, that we are going to continue to dump. Now, like I said, this slow move down is kind of concerning because yes, we're getting some low time frame, and by low time frame, I'm talking about like 1 to 2 hour pumps, but it's just slow and steady on the way down. I don't think we've had a true capitulation. I don't think we've had something like this, right? I don't see any wicks like that. These are the buys, or these are the sells or the panics that you guys want to buy. And again, whenever we have wicks like this, okay, the more we get it, the more ineffective it's going to be. Now, this was a clear Bitcoin range back in, December, before we had, multiple dips, and then we, eventually died. But this is the only big wick that I see. Because if you take a look at this, these are 7K, 7K there, 6K there, about 7 to 6%. We haven't had one of those, right? So that's why I don't think longs are currently safe. Although I think that this area holds, I think we can get a deeper wick into this area. And this is the area where you want to possibly build some low time frame longs, and I'm not talking about swing longs, because the time to swing anything is gone. This is a shorting market now. If you are a spot trader and never touched leverage, fuck off for the next year and come back, unfortunately. But this is where the leverage shorts are going to, well, the bears are going to prosper. Shorting is much more fun than longing because it requires a skill that only 10 to maybe 15% have, right? If you didn't sit down and give your time to learning and understanding charts in the market, you will not survive. That's the unfortunate truth. The bear market is for the skilled individual and for the long-term investor. It is not for retail to come in and extract as much money as they possibly can, hoping that they have enough money to, do fun stuff with. No, you have to literally sit down and learn how to trade, leverage, and make money. So this is why I like this cycle, because it's going to weed out all of the fakes and the scammers and the grifters and the retail who know absolutely nothing, and leave the few that actually want to make money, understand the markets, give and devote time to doing so. Those people, in my opinion, are going to prosper. And, like I said, select few. So, long story short, dips into the yellow zone are for buying. We haven't had one yet, so I don't think the bottom is completely in. And right now, you know, everyone wants to be in positions. You have to wait for triggers to be hit. And the first trigger for me would be a reclaim of this 89.2K region. Flip it, and then you can long with stops below, targeting the range highs. But the focus is clearly on a select few alts, like Zcash and whatnot. Those are the coins that you want to be trading because it's highly volatile. Not stuff like Bitcoin where you absolutely don't know what's going to be happening. But let's go back to the weekly chart here. If I switch to the monthly, okay, the monthly market structure is still intact. Because if you take a look, now this is why understanding market structure is important, because you could have a structure for different time frames. The daily was already broken when 120 was lost. The weekly was lost when was broken when 108K was lost. Now the monthly is not lost until this level here around 82.2K is lost. Now, why am I saying that? Well, if you flip to a line chart, you will see higher high with a higher low, higher high with a higher low, higher high, no confirmed higher low made. So if we break below this previous higher low point, then you have a break in monthly structure, and it's going to be the same case as it was with the weekly, where we've lost this level here. We broke market structure and then continued to the downside. All right, so keep that level. That's not going to change today. It's not going to change in a week. That's already set in stone. 82.3K is your monthly level that needs to hold. Okay. Now, and I'm talking about a monthly close below that level. Now, going back to the weekly, right? Like I said, I expect this level to hold. Maybe that was the low time frame dip, and then we consolidate before we have a leg down. A lot of shit going on in the markets. So I don't know what's going to happen, and we're going into the weekend. Weekends usually have low liquidity. Last weekend was just literally no movement, and then Monday open, and then we continue to dip. And then before that, again, quick move up, and then dip, right? So touch some grass. I don't think you guys are missing anything. If you really want to accumulate, then you can slowly buy. You have to just go into the mindset of, if we continue to dip, how much further can we go down? am I okay holding? Do I buy more at that level, right? But that is for a long-term investor, for a retail trader who's just coming into the market. And I do feel bad for those people because they come into the market thinking or promised, hey, I'm going to make this much money because crypto is volatile and all it does is go up. But they come in under false pretenses thinking that and not being trained enough to understand market structure. Um, so, my recommendation is sit down, look at charts, back test shit, different time frames, start from high, go lower, and see what you can find previously and compare it to what it is now, right? Um, but I don't think you guys are missing anything over the next week, 2 weeks, as we go into a very slow and illiquid period during the holidays. And these are the times where we could see wicks like this because volume is so low, right? Not many people are trading. All it takes is one giant sell-off for a wick like this to happen, or one giant fat finger of a buy for a wick to the upside to happen to get more shorts filled. The levels that I want everyone to put onto their charts are going to be very clear. The monthly level at 82.3, the weekly demand zone that even if we break the market structure, right, we're hoping that this is not a monthly close below 82K. We get some fills in this area and then continue to make another lower high. So that is going to be from 72 down to 54K. Okay. Going back to previous cycle, the golden pocket provided a bounce. Now, how much of a bounce? 15%. Okay. That is a good amount in a month on Bitcoin. Whether you're happy with that or not tells me all you need to know about who a degen is. But that golden pocket level is going to be from 57.6 down to 53K. Another level that everyone should have on their charts. And finally, another demand zone that has not been touched. And again, you can take a look. This was a demand zone here as well. Notice how we touched it, ran up, came back down, filled it completely, and then ran back up. That is around the 786 fib. This is around the 786 fib. That is around 40K to 39K. These are the macro levels that everyone should have on their charts. These will not change. Whereas, for now, these supply zones are not going to change. Dailies continue to change as we, have more things develop, but the daily resistances and supply zones, but these demand zones on higher time frame and the supports do not change. This video should be applicable for the next few months, but this will be the only video that I'm making on the macro Bitcoin analysis. So if you ever want to see what levels are what, I would probably watch this over and over again, or make a chart and keep these level until they hit, whether it takes a few weeks, few months, possibly a few years, because I don't know, from here, it was November 20th. We didn't hit it until, the 22nd, or sorry, 2022 and 2023, right? This was last year, assuming we hit the demand zone, which is basically this here. Okay, this could take some time, and this could hit sometime next year, or maybe, yeah, probably sometime next year or 2027. I'm gonna leave you guys with that. And this will be my final Bitcoin macro and micro analysis. Thanks, everyone. Catch you later.